What if I told you that the price of bread, the cost of your morning coffee, and even the value of your retirement account are suddenly being decided by a giant, high-stakes guessing game? It sounds like chaos because it is. Right now, a critical nerve center of the U.S. economy has gone dark. We are in the middle of the USDA Data Blackout of 2025, and the financial fallout is just beginning. Most people have no idea this is happening, but by the end of this video, you will understand exactly what it means for your money. Every month, the U.S. Department of Agriculture, or USDA, releases one of the most important documents in the global economy, the World Agricultural Supply and Demand Estimates, better known as the WASDE report. Think of it as the ultimate cheat sheet for the entire food industry. It tells farmers, traders, and giant corporations exactly how much corn, wheat, and soybeans we have, and how much the world wants to buy. It's the data that prevents panic and stabilizes prices. But because of the federal government shutdown, that report, specifically the critical October release, is gone. Vanished. There is no official data. The market is flying blind and the turbulence is getting severe. This isn't just a problem for farmers in Nebraska. This is a problem that will ripple directly into your life. Today, we're breaking down the three biggest impacts of this data blackout. First, the wild volatility it's creating in the grain markets. Second, how this will inevitably impact future food prices. And third, what it means for anyone invested in the U.S. economy. Before we dive into the chaos in the cornfields, do me a favor. If you believe in getting straight, unbiased, financial news that respects your intelligence, hit that subscribe button. It tells YouTube that you value clarity over clickbait, and it helps our small channel bring you more content like this. We've got a lot to cover, and trust me, you'll want to stick around for the part where we discuss how this affects your portfolio. All right, let's talk about what happens when you turn the lights off in the middle of a billion-dollar trading floor. The September USDA reports already gave us a taste of the drama. Corn stocks were reported at 1.5 billion bushels, way more than anyone expected. The market reacted instantly and prices tumbled. Now imagine that, but without any official numbers at all. That's where we are. Traders are now relying on whispers, private surveys, and satellite images of crop fields to make billion-dollar bets. It's a recipe for extreme grain market volatility. Let's look at the big three. First, corn. Export commitments for the new marketing year were looking strong, standing at over 35% of the USDA's last forecast, which was well above the 5-year average of about 29%. This suggested high demand. But with the USDA Data Blackout of 2025, no one knows for sure what the final yield is. Are we looking at a record harvest that will push prices down, or did the late-season weather damage the crop more than we think? The uncertainty is causing massive price swings, making it impossible for businesses that use corn, think ethanol producers or livestock feeders, to plan ahead. Then there's soybeans. The picture here was already weaker. Export sales were lagging significantly at just under 24% of the forecast, compared to a 5-year average of over 43%. This was largely due to weaker demand from China. Without the October WASDE report, traders are left guessing. Will domestic crush demand pick up? Will China re-enter the market? Every rumor sends soybean futures on a roller coaster. And finally, wheat. The last report we got actually increased the production estimate to nearly 2 billion bushels. This news of a supply glut sent prices spiraling downward to their lowest levels in over a year. Now, with the USDA Data Blackout of 2025, the market is trapped. Is the supply really that big? Or will export demand, which was tracking ahead of the 5-year average, eat through that surplus faster than expected? Historically, the October WASDE report itself causes price swings. Corn often moves 10 cents a bushel and soybeans can swing by 20 cents. But this year, the absence of the report is creating a prolonged period of instability that is far more dangerous. It rewards speculators and punishes producers and consumers. So why should you care about traders getting nervous in Chicago? Because that nervousness is a direct pipeline to your grocery bill. The chain reaction is simple but brutal. When the price of corn, soy, and wheat is unpredictable, The companies that buy these raw goods have to protect themselves. A company like a massive bakery or a cereal producer can't afford to guess what flour will cost in 3 months. To manage that risk, they buy futures contracts, but in a volatile market, the cost of that insurance goes way up. They have to pay a premium for price certainty. And where do you think they pass on that extra cost? To you, the consumer. We likely won't feel this tomorrow, but the government shutdown's financial impact will start showing up on shelves in early 2026. The prices are being locked in now during this period of peak uncertainty. It's not just about bread and cereal either. The cost of animal feed is the single biggest expense for raising cattle, hogs, and chickens. Lower corn prices, in theory, should mean cheaper feed, but the volatility makes it risky for ranchers to expand their herds. They don't know if feed prices will suddenly spike. This hesitation can lead to a tighter supply of meat and poultry down the line, meaning higher prices at the butcher counter. The ERS, or Economic Research Service, which is another part of the USDA that's currently shuttered, had already projected a mixed bag for 2025. Receipts for corn and soybeans were forecast to be down, while livestock receipts for broilers and hogs were expected to be up. But these forecasts are now just ghosts in a machine that's been turned off. The USDA Data Blackout of 2025 makes all previous projections unreliable. We're charting a new, more expensive course, and it's being set by fear and speculation, not by data. This is a critical moment. If you're finding this breakdown useful, please take 1 second to hit the like button. It's a zero-cost way to help this analysis reach more people who need to understand what's happening to our economy. We're about to get into the investment side of things, and you don't want to miss it. Okay, so the markets are shaky and food prices might rise. But how does this connect to your 401k or your brokerage account? The answer is in more ways than you think. Many of us are invested in the agribusiness sector without even knowing it. If your portfolio holds broad market index funds like the S&P 500, you have exposure to companies that are directly impacted by this. Think about agricultural equipment giants that sell tractors and combines. If farmers are uncertain about future profits due to grain market volatility, they delay buying new equipment. That directly hits the company's bottom line and its stock price. Consider fertilizer and seed companies. Their sales are tied to the acreage that farmers decide to plant. But how can a farmer confidently decide to plant more corn if they can't get a clear signal on the price? This uncertainty flows directly into the earnings reports of these massive corporations. Even banks are affected. Regional banks in the Farm Belt provide the loans that farmers need to operate. When commodity prices are this volatile, it becomes much harder for banks to assess risk. They might tighten lending standards, making it more difficult for farmers to get the credit they need. This can lead to a slowdown in the rural economy, which has knock-on effects for the entire country. For those of you who are more active investors and are interested in investing in agriculture stocks, this period is fraught with peril and opportunity. Some traders are using private data firms and advanced analytics to try and get an edge. They are looking at satellite imagery to count corn tassels from space or using AI to scrape news articles for sentiment. This is a high-risk game. For most of us, the smarter play is to be aware of the risk in our portfolios and to ensure we are diversified. A sudden drop in the agricultural sector shouldn't sink your entire retirement plan. The key takeaway here is that the USDA Data Blackout of 2025 is a stark reminder of how interconnected our economy is. An administrative shutdown in Washington, D.C. can create financial risk for a farmer in Iowa, a factory worker in Ohio, and an office worker in California. It shows that reliable, transparent data isn't a luxury. It's the bedrock of a stable market. So, what have we learned? We've seen that a lack of government data has thrown the grain markets into a state of chaos, driven by speculation instead of facts. We've connected the dots between that volatility and the potential for higher food prices in the near future. And we've uncovered how this uncertainty creates real financial risk that could be hiding in your investment portfolio. This isn't about being pessimistic. It's about being prepared. Understanding these forces is the first step to making smarter financial decisions. The world of finance can be noisy, but with the right information, you can find the signal. Now you have a clearer picture of the USDA Data Blackout. but I want to know what you think. Leave a comment below with your biggest question or takeaway. And if you're ready for the next topic, click here to watch another video. Subscribe to join the conversation. See you in the comments.